Hey guys, what's up? How's it going? My name is Robin. Welcome to today's video, and inside today's video, I'm going to be showcasing to you guys my favorite top 5 dividend stocks for 2021. So in today's video, I'm going to be showcasing to you guys some of the best performing stocks inside my portfolio, as well as some stocks that I think are going to do the best over the next couple years, because 2021 is going to be an interesting year in the market, and these dividend stocks are super cool because they're really stable stocks. They're by really good quality companies that have a history of growing their income, and you can literally make money while you sleep because all you have to do is invest in these companies. You can feel good about it, and then that money will grow over time as these companies grow in stock value as well as their dividends increase, and you get them on a regular basis. And this is the big thing that really caught my eye and got me basically started with investing in the first place, was the idea of buying these stocks that are pretty consistent, and you don't have to feel bad about it when the markets go down or dips happen, because you know these stocks are going to recover, and all you have to do is keep putting money in on a regular basis, and you're guaranteed to grow your wealth and actually get some pretty solid, decent returns in the end. So in today's video, these stocks are all stocks I hold inside my portfolio, and I'll show you guys how they've been doing inside my portfolio, and we'll go through them one by one. And to recap the portfolio, I've basically been building this dividend-based portfolio over the past year. So all these stocks either pay a monthly dividend or quarterly dividend, and they're all really good companies that I highly recommend. And you can get those dividends on a regular basis. I've just been reinvesting them back inside the portfolio, and as you guys are starting to see, that money just compounds, and that's where you get that super cool snowball effect that takes place. And at this point in time, my dividend stocks are making me roughly, give or take, around $50 a month, although it kind of is trending upwards over the past couple months. So we'll see that income grow on a regular basis, but I'm roughly making about $50 a month, I should say, for my dividend stocks. And here's a quick little chart that you guys can take a peek at that actually shows my dividend income over the past couple months since we first started this portfolio way back in the beginning of January 2020. Another big thing I want to talk about these companies is I like to invest into growth-based stocks as well that not only have good dividend income, good dividend yields, and they do grow their dividends over time, but also we see some good solid stock appreciation, because that's where a big chunk of your money comes from investing into the stock market, is these stocks growing over time in share price. So we'll talk about that, and I'll show you guys my portfolio in just a second. But before we do that, I just want to say, if you guys want to sign up to Wealthsimple Trade, I'll put my affiliate link in the description of this video. You guys can check that out, and you'll get $10 to invest for free if you sign up, and I'll put a link to the Patreon Discord group if you guys want to support the channel with that. Alright guys, so let's jump into the portfolio. I'll do a quick little overall recap, and I'll start talking about these top 5 dividend stocks that I think are worth buying in 2021. Alright guys, so here's a quick little portfolio recap so you guys can take a peek at this. So here's my TFSA and Wealthsimple Trade. We have $24,000, and our portfolio is up $2,504 all time, which is 12% return over the past, I'd say, a little bit over a year or so. So the portfolio has been doing pretty well, and as you guys can see, we have some pretty good solid stock appreciation, as well as that monthly dividend income growing slowly on a regular basis. So the first stock on our list we're going to talk about today is Manulife, or MFC ticker for short. This is a really solid Canadian financial company that has been doing really well in terms of earnings and growing over the past little while. So if we bring up the graph of Manulife over the past year or so, we can see that Manulife is up 31% in the past year. And this is because during the pandemic, this company took a big hit in share price, and it was long to recover. But Manulife actually did really well during the pandemic. They had really good earnings, and I could kind of just predict that, with a company that's growing, having good earnings, and a share price kind of lagging behind that, we could kind of predict that this company is going to grow. And I still think this is one of the best companies to invest into right now. They're still down quite a bit. If we go over the past 5 years, we can see that since the pandemic, they're still not recovered 100% from pre-pandemic levels, and over the past 5 years, they are growing at 45% rate. So pretty good growth. They also are, like I mentioned, like all these companies I mentioned on this list are really good dividend-based companies. So we have 42 shares of Manulife inside my portfolio, which is a total value of $1,131, and we are currently up 25% return with Manulife inside our portfolio. So I think this is a really good company. This is a company I wish I would have bought more of, but there's so many companies to buy, it's hard to focus on one. But Manulife is definitely one stock to definitely take a peek at for 2021, and I think we're going to see that continued growth happen. And as you guys can see here, Manulife has a market cap of $52 billion, so it's a pretty big company, and they have a current dividend yield of about 4%. So they are a really, really good, solid dividend-based company. Anything over like 2 or 3% is generally on the higher side, and 4% is pretty solid. And Manulife does have a good history of increasing their dividend yield. So I do think Manulife It's honestly one of the best stocks, and that's why it's the first stock on this list that I recommend you guys check out for dividend stocks for 2021. The next stock inside my portfolio we're going to talk about, which is the number 2 stock for today, is Ryokan. So Ryokan is one of Canada's biggest REITs, and I think all REITs are in a very interesting position. I picked Ryokan because it's just one of the best REITs in terms of market cap. Like, the company has billions and billions of dollars. They have a lot of assets, and they're one of the best growing Canadian REITs. So, REITs took a big pounding during the pandemic. As you guys can see, over the past 5 years, we've seen this big dip in REITs, and we've seen this slow recovery, specifically over the past little while. So I think REITs are in a really good position to grow, and this is why I think REITs are definitely probably one of the best dividend stocks to buy, because you get really good yields, and they're actually trading at a very undervalued right now because of all the the things with the closures and everything shutting down and whatnot. It's hard for these REITs to recover, but we've seen that recovery happen, and I imagine this is just going to continue to happen throughout 2021 and maybe even 2022. So Ryokan down still about 30% over the past year or so. I think this is still a really good solid company to buy, and I'm definitely going to be picking Ryokan because it's just one of the best and more secure Canadian REITs. So we currently have 92 shares of Ryokan inside our portfolio, total value of $1,779, and we are currently up 8.79% over the past year with Ryokan, which is pretty solid. So Ryokan has a market cap of $5.6 billion, and they have a current yield of about 9%. So this is actually a little bit higher because I think their year there's more actually about 6%, because they did cut their dividend towards the end of last year to kind of just help to weather the storm from the pandemic. But I think their current dividend yield is around 6. It's around 5 or 6%, which is pretty solid. It's much more stable, and I think that this stock and this dividend stock also not only has a good dividend yield, but has potential to get some really good stock growth throughout this year. So definitely keep your eyes on Ryokan. The third stock on this list today is going to be none other than my favorite dividend stock, my favorite Canadian dividend stock of all time. This is Toronto Dominion Bank. TD is ticker is TD for short, and this is currently trading at $81 Canadian. And TD is on an absolute tear since the pandemic. Over the past couple years, as you guys can see, in the past year, TD is up 34%. So absolutely crazy growth, and this has happened because banks got hit really hard during the pandemic, but we've seen that recovery happen, and they've actually even recovered past pre-pandemic levels pretty much for the most part, as you guys can see here with this cool little graph. So look at that rise over the past year, lots of good growth, and I think TD is one of those companies that just keeps growing. They keep earning their revenue. They're one of the biggest banks in North America, not even Canada, but North America, and they just keep diversifying their income streams, and they just keep growing worldwide, which I think is the key to banks. Like, just keep growing their assets and growing their shares and increasing their dividend income. TD is one of the best dividend growth stocks in Canada, and they just keep growing, and I think it's one of the best stocks to invest into. So we have 28 shares of TD inside my TFSA, total value of $2,275, and it is up 19% over the past year. It's almost 20% gain. Whoops, didn't mean to click that there, but over the past year, 20% gain is absolutely crazy for one stock, and a solid stock like TD. I think this is just really cool, and if this continues to grow, I'm going to be really happy. And TD is actually one of the biggest stocks I have in my portfolio. It represents about, I'd say, about 10 to 15% of my portfolio, because I do hold it in various ETFs as well. TD has a market cap of $146 billion, so it's a solid company. Nothing's going to hurt TD, and their yield is currently sitting at 4%. So not only are they a good stock appreciation, like they have good stock appreciation, but they also have a really nice dividend yield of 4%. So you can get nice quarterly dividend income from TD. TD is my favorite stock. So if you're going to buy a dividend stock, I would highly recommend TD. I think it's one of the best banks, but all the Canadian banks are good options here. But I definitely want to add it to this list because I think it's like a really just a no-brainer pick, in my opinion. So all the stocks I mentioned so far have been pretty solid companies, pretty safe companies. You can't really go wrong with them. Today I'm going to pick this one company I'm going to pick here is just to pick something a little bit different. It's more growth based. It's not as commonly known as some of these other stocks, but this is Severia Corp, and this is one stock that has some pretty good growth. They have a monthly dividend, and they have seen some good dividend growth over the past little while. And this is a little bit of a riskier play, but I think this is one of those stocks that definitely has some potential to grow over time. And Severia Corp is a healthcare accessibility company, and over the past 5 years, this company has grown 188%. So lots of stock appreciation. Over the past year, it's grown 61% since the pandemic. So, a healthcare-based accessibility, a company that helps the elderly and whatnot is really, really valued right now. And this company just keeps growing and growing, and they have a nice monthly dividend. And I see this company doing quite well in the future, and we've seen that growth over the past a while. So this represents some of the more growth-based stocks inside my portfolio, and there's nothing wrong with adding a couple of these here and there. Just, make sure you do your research, make sure year you look at these companies, see the growth, see the increases, and make sure they're making good revenue and whatnot, and you feel good about adding them inside your portfolio. So Severia Corp, we have 18 shares. We only have $300. This is definitely something I want to improve on over time and add more, especially since it is such a cheap stock, trading at only $15 Canadian. But our all-time performance is that we were up 16% for Severia Corp, so definitely a really good company and has really good growth, and I definitely will be adding more of it to my portfolio as time goes on. Their market cap is $891 million, so they're kind of like that mid-range company, not super huge like a TD Bank or something like that, but they definitely are big. They're definitely a big established company. Their current yield is 2.69%, so just under 3%. So overall in the future we could see some good dividend growth, and like I said, they do have a nice monthly dividend stock. So Severia Corp is definitely a stock you might want to add to your list, and has definitely performed pretty solidly in my portfolio. Alright guys, the last stock for this video is going to go back to one of the most stable, and this is once again going to be a mixture between growth-based stock and a dividend stock. CNR stock is a growth-based stock, pretty consistent railroad company that is just continues to grow and is really the backbone of the Canadian economy. You can't go wrong with investing in this stock. Over the past 5 years, CNR stock is up 80% in terms of overall stock appreciation, and over the past year, they are up 32%. So really good growth since the pandemic, and they've just been doing really well. Their dividend growth over the past 5 or 10 years has been about 17%. So again, this is a company that's kind of in that growing phase, and even though they weren't a dividend stock to begin with, and they're still kind of on the lower side right now, over the next 5 to 10 years, we can see some huge dividend increases. Like if they're growing their dividend by 15 to 17% or so per year, that's really aggressive dividend growth. So, over time, this is definitely one of those companies that's turning into a dividend stock. And I think this is a really good reason to invest in the company right now, because you get that nice growth plus the potential for that dividend yield to increase over time. We currently don't own a lot of CN stock, mostly because it is highly priced. It's $138 Canadian. Some people say it's a little bit high, and I do agree it is high, but I don't see this company is slowing down anytime soon, so I think that's okay overall, and I definitely should be adding more inside my portfolio. I currently have a total value of $400, which isn't very much. It's one of the stocks I recently started buying towards the end of last year, and I definitely will be adding more as time goes on. We currently have about $20 in growth inside our portfolio, and that represents a 5% growth over the past year, but realistically we've only been investing in this stock over the past maybe couple months or so. So once again, if we started investing this at the beginning of the year, we just would have seen a lot more growth. Because we've just been buying it over the past couple months, we've just seen a little bit of growth, but still really solid company at the end of the day. Current market cap is $101 billion, so once again, massive company, very safe company to invest into and should do well. Current dividend yield is 2%, which is once again a little bit on the lower side, but we've seen them increase that dividend very significantly over the past 5 years, so lots of dividend growth there, and you'll see a lot that compounding return really start to add up over the next couple years for sure. So that's my top 5 dividend stocks for today. Hope you guys enjoyed them, and let's continue on with the video, and let's look at some of the dividend income that I made inside my portfolio over the past couple weeks. So I like to touch upon the dividend income so you guys can see how the money is actually going. You can see how this stuff works. So basically what we do is take all these dividends, we get them, they go into our account, and then we just reinvest them on a regular basis. I kind of pop into my account every single day. I kind of see what we have. I see if any of my deposits went through, and whatever I had, I just buy stocks that I already have, and I keep growing the portfolio. So as you guys can see, these dividends are getting paid on a regular basis, and think of it like I mentioned earlier. This is money you're literally getting while you sleep. You don't have to do anything. You just buy the stock, you buy the company, you hold it long term. That's all you have to do, and you get this money. So March already, it's beginning of March right now. If you guys don't know, I'm recording this video on March 10th of 2021. As you guys can see here, we got a dividend stock from Fortis, $5 dividend payment, Enbridge $2.51, H&R REIT $6, Ryokan, like I mentioned earlier, $6, and VDY, which is the main ETF we hold inside a portfolio. Think of VDY as kind of, I talked about all these stocks in today's videos. VDY is kind of like the ETF version of those stocks, so to speak. Big, massive dividend payment of $26. That's the biggest dividend payment I've ever gotten inside this portfolio, and that's really cool. And it is one of the biggest ETFs I hold. So that was a huge dividend payment, but as you guys can see, that money does really start to add up and grow over time. And as you put more money, more and more money into your account, you really get that solid, that cool, exciting snowball effect that, it just feels good to get that money and have it growing on a regular basis. Alright guys, so that's it for today's video. Hope you guys enjoyed it. If you guys want to follow alongside the channel, be sure to subscribe. And if you guys did enjoy this video or found any value inside this video, please give it a big thumbs up and tell me what you guys think in the comments. Feel free to, if you guys have any questions or anything like that, let me know. Feel free to leave a comment. I'll try to help you out as much as I can. And if you guys are interested in watching more videos, I'll add some end screens so you guys can click on those end screens to watch some more videos about my portfolio and whatnot. But anyways guys, thanks for joining me today. I hope you guys enjoyed this video. Take care, and I'll see you guys later.